Of Market Call is made possible by Robinhood. Try out Robinhood Legend, the all-new free desktop trading platform designed for sophisticated traders like you. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood Financial Fee Schedule for more information. There's also no cost associated with wishing people certain things. So at 11 a.m. on the East Coast on this September 30th, I would like to wish Ellie Nathan, Dan's second daughter, his youngest child, a happy 20th birthday. She's in class right now. Happy birthday, Ellie. There's no way she's watching. Maybe one of her friends is watching. I don't know.
Yeah.
In addition to that, I'm not going to dox her with a number, although I know the number. It's Amanda Diaz's birthday. Dan, what do they call it when you blow somebody's inbox up?
You blow up their inbox.
Yeah, we'll do that to Amanda on her birthday today because she is celebrating not a milestone birthday, although in today's world, every birthday is a milestone, a birthday nonetheless. So happy birthday, Ellie. Happy birthday, Amanda.
Yeah, Amanda, you and I figured this out years ago. We've known each other, I want to say 15 years, which is crazy. I think I wished on the final trade on Fast Money or something, I don't know, 15 years ago, I wished my lovely daughter Ellie a happy 5 or something like that. And then Amanda goes, that's my birthday. I didn't know it was her birthday back then, but happy birthday. You guys share it. I also have a niece that shares that birthday too. Guy, lots going on here. We haven't spent a lot of time over the last week for the potential of a government shutdown. I think there's a lot of mixed sort of data on what that can mean for markets. A lot of it comes down to politics, let's be honest, right? And so the idea of trading off of politics doesn't make a whole heck of a lot of sense. But I think you and I have been talking about over the last week also that just some of the activity that we've seen around month end might be something that's kind of taking hold a little bit. We're also going to be getting into Q3 earnings soon enough. And I think a lot of folks are going to start to discount that today. If you are a sophisticated trader, which is what the Legend here is to help you with, we're going to go through a few trade ideas that we kind of put on last week. One was in the Russell 2000 or the ETF that tracks it. That's the IWM. You and I have also had a lot to say about Oracle. We're going to talk about just the price action there. It's something that we thought was going to fill in that gap. It is in the process of doing that. And then there just seems to be every day, Guy, a new infrastructure data center contract from a hyperscaler to a neo cloud, or from a model maker to a neo cloud to a hyper, it just seems like never ending. So we're going to talk a little bit about
the circular nature of that.
What do you want to hit right out of the gate here?
Well, you mentioned potential for a government shutdown. I watched Squawk and Friends this morning. They had Speaker Johnson, then they had Hakeem Jeffries on a few segments afterwards. Both have their positions, both basically talked about the friendship they have, but the differences that they have. And, just reading the tea leaves, it feels as though both sides are pretty well dug in. So, we've seen this before. I don't think, and I think you agree with this, I don't think there's a reason to trade around this. I have no idea if it's going to come to fruition or not. But more importantly, I think if it were to happen at midnight this evening, what's the duration of it? I mean, is it going to be a 2-3 week thing, or is this thing going to extend into, November and December? I don't think there's any way to sort of game that out. And quite frankly, I don't think there's any way to sort of game out what it necessarily means to the market. I will tell you, if it were to happen tonight, my instincts suggest it will last through the week, which means all the metrics, all the data we're supposed to get this week, specifically the employment data on Friday, I guess gets shelved or scrubbed or something. So that, I guess, is a bit of a wild card. And you obviously mentioned month end, quarter end today. So yeah, obviously a lot of balls in the air.
Yeah. And, talking about trading it and what the market is perceiving, this sort of risk right now. If you just look at, let me go to the Legend here for a second. I'm going to pull up the SPY here, and we're just going to price up what the implied move is here. Let's go to the options change here. SPY is trading around 663. Let's call it and a half, guys. So if I want to just figure out kind of what the Let's go to October 3rd, which is Friday, right? Here's the at the money here. Let's just kind of price up the at the money straddle. If it costs 620, guys, so if you're buying that and the underlying is 663,
1%.
oh, look at you. Look at you are a sophisticated trader doing some quick math. So the at the money straddle is implying a 1% move in either direction between now and Friday's close. Now, if you are just saying you're bullish right here, and you want to buy that 663 call, cost you 358, let's say. So your break even would be the strike 663 plus the 358, so 66.58, a 0.5%. I mean, like, think about that. I mean, so the market's not pricing a whole heck of a lot. So again, we're not going to trade the shutdown. Maybe it doesn't last too long. I love to hear, and I mean this sincerely, no matter whether you like Johnson or whether you like Jeffries or you don't like the other one, it is really nice to hear on the eve of what could be an important sort of political event, these guys say, we're friends. Okay. Like, we need more of that. Can we agree with that?
100%.
So, like, listen, I hope they come up with a bipartisan fix. No one wants government workers to be furloughed or government services to be suspended. And I think the administration is threatening like mass firings and acceleration of Doge, that sort of thing. Nobody wants to see that, right? We do not want to see people lose their jobs.
I agree. And it's not that we want to go down this road, but you know what, I've come to the realization, I think that there are more friendships across the aisles than there are enemies. And enemies is probably a strong word, but I think we spend a lot of time, or the media spends a lot of time, on either side, like the very far left or the very far right. But I think the reality is that I think there are far more people in the middle that actually probably do get along. So maybe somehow cooler heads will prevail on this thing. Again, regardless, I don't necessarily know, if they come to some agreement at the 11th hour, I don't necessarily know that's bullish. And quite frankly, I can't say with any degree of certainty that if it were to sort of have a government stoppage tonight, it would have the market sell off in a precipitous fashion, because that's just the market that we seemingly find ourselves in right now.
Yeah, I mean, I'm not optimistic about that. I just, thinking about what the Democrats want, you know what I mean, as some sort of compromise. I just don't think the Republicans are going to give it to them. And so then the question is, what did, the minority leader Schumer for the Democrats, I think 3 months ago, he just caved. I mean, like, he didn't even try to extract any sort of, this is a big negotiation. I mean, that is what it is, especially when you have these sort of stopgap sort of measures. So it is what it is. You and I are, neither of us are political scientists. Let's move to Torsten Slok. I think we quoted him yesterday. This is an interesting
work
from Apollo. Every day he comes out with a note. Usually it's a chart book. Amanda's going to pull this up because he's someone who's been somewhat skeptical on the economy. I think I'm accurately kind of summarizing his sort of take here. So his note this morning: the economy is strong, inflation is high. So guys, let me just run through this really quickly so people bear with me. I'll try to read it very quickly. The consensus expects non-farm payrolls for September to come in at 50,000. I think that is too pessimistic. The charts below are blah, blah, blah. All right. So here's his wrap on the economy. Okay. And you can kind of give me the 411 after this. Trade policy uncertainty is improving. Economic policy uncertainty is improving. Consumer expectations to business conditions are improving. Consumers are less worried about losing their jobs. Corporate CapEx plans are improving, and jobless claims are still low. The daily TSA data for the number of people traveling on airplanes is strong. Data for the number of people going to Broadway shows, the movies, and visiting the Statue of Liberty is strong. Weekly data for same-store sales and retail is strong. Weekly data for bank lending is accelerating. Weekly bankruptcy filings are starting to trend lower. Weekly data for business formation is still strong. There are significant upside risks to inflation in the regional Fed surveys and the ISM services price paid. Combined with the Atlanta Fed expecting GDP growth to be 3.9, we know that it's just 3.8% in Q2, so 3.9 for Q3. The bottom line is the economy continues to do better than consensus expects, and the labor market is likely weakened because of lower immigration and perhaps also AI implementation. Here's the most important part, Guy. With continued strong growth and upside pressures on inflation from tariffs, immigration restrictions, and the declining dollar, the FOMC should really be talking about rate hikes rather than rate cuts. And by the way, all of those data points are supported. If you want to just scroll through these charts, we're going to put it in the show notes. So he's not just kind of doing this, okay?
Winging it, yeah. Well, let me say this. I don't know if rate hikes are in the cards, although if you listen to me over the years, I've actually talked about the counter move would be to hike rates, and a lot of people obviously do not think that's the case. But for him to say that, and this is extraordinarily well respected strategist slash economist, I mean, it's pretty interesting, but he bases it on empirical evidence. Now, Statue of Liberty notwithstanding, I don't know. I don't know when that became sort of a go-to metric to look at in terms of consumer spending. But with all that said, I mean, everything he points out, there's an accuracy to it, and we have the charts to back it up. But a rate hike at this point, obviously, you'd see a complete round turn in the dollar. I think the dollar would act extraordinarily favorable to that. You actually might see the gold market sell off in a meaningful way, something we haven't seen in a while. But of course, the problem is this is an administration that does not want the dollar to strengthen. It actually wants the dollar to weaken. So although he's probably right, just through the lens of all the numbers and the examples that he brings forth, there's zero chance it's going to happen.
Yeah. Zero chance.
Doesn't mean it's not the, by the way, it doesn't mean it shouldn't be talked about, and it might not be. People make the argument that the rest of the world is lowering rates, and I've heard that time and time again means we should be doing the same thing. No, it's like that thing your grandmother used to say to you. Now, my grandmother called me little guy, and she would say, little guy, just because everybody is jumping off the Empire State Building, does that mean you should as well? It's sort of an odd thing to say because there were not a lot of people jumping off the Empire State Building, but I got her gist.
Yeah, well, what she didn't mean like the Brooklyn Bridge or something like that. I mean,
no, I think it was the Empire. It was just recently built, so when was a kid, so everybody was excited about it.
It was. I read I listened to a great podcast. It was from this guy, Professor Jackson. It's History That Doesn't Suck. It really is a great, and so he goes through all these different historical periods. One of them, and I want to say this was a few months ago, was on the skyscraper race in New York City. And at the time when these skyscrapers were being built, they were the tallest in the world, and so they kept on going for that. And just all the shenanigans that went on between the architects and the builders, and trying to kind of game out. This was obviously Chrysler and not World Trade, but obviously
the Empire State Building. Yeah.
So one thing I'll just say,
by the way, the Chrysler Building, in my opinion, when you look again, I don't know how we go down these roads, but when you look at the skyline of New York as you drive up, let's just say from New Jersey, and you're approaching, to me, the Chrysler Building is the building that stands. I get the Empire State Building.
Now, how many you can fit? You know how many Chrysler buildings you can fit in the Empire State Building?
2.5.
It may be, or 3. I think if you put 2 side by side and you put one down in it, sure. I think you get. I met a guy at a party a few weeks ago, and he had some ink on his forearm, and it looked like just
Did a pen explode?
All right, so it
was.
I
don't know what you. Oh, you mean
tattoo? A tattoo. The kids call it ink. Okay.
Sorry.
Right? And so the guy it was just a line that was basically like, it was kind of cool. I'm not into tattoos. I don't condone tattoos. Don't get a tattoo. But it was like basically the New York skyline. And this guy is probably close to your age, like late 50s or something like that. And he used to work in the Chrysler Building. And he told me the story. At the top, the very top, there is a big office where the CEO of Chrysler used to be. And it's supposedly like epic, like the views and all that sort of stuff. It's in that like set. And he used to go in there at late in the afternoon or evening. He'd go get a 6-pack of beer. He'd go all the way to the top. And he said you had to take like 5 different elevators because back then they didn't go all the way up.
Sure.
There was a security guy on the last floor. He'd give him a 6-pack. He'd have his dinner and he'd go and he'd sit in there all alone and just see, because it was abandoned.
Dig that. That's badass.
Cool. That's kind of some
very cool.
And that we all got there because of his ink and all that sort of stuff. All right. So in New York City, guy, we are in the capitalistic mecca of the world. One of the reasons for that is because the biggest banks in the world are headquartered here. They have been forever. Maybe, back in the 1700s, 1800s, it was kind of probably in England, that sort of thing. But here, you know what I mean? Like, this is where they've been. Okay. So they're all going to report earnings by, I think, the large money centers. I think Amanda has a slide here, in that mid October period by expiration, which is, I think, October 17th, the third Friday guy of the month. That's usually when regular way expiration is, right? And so when I think about all of these names, you think, I saw some stuff on, I think Doug was forwarding, Doug Katz was forwarding some stuff to us on valuations and some of the banks. And we've been talking about JP at 3 times tangible book, and the list goes on and on. Doug had been shorting these names. We were talking about it yesterday, thinking about what puts in the XLF might look like into the print. Let's just pull up JP Morgan for a second here. This is obviously the largest bank of the world. The stock's up 32% on the year. Bank of America is up 20%. Wells Fargo is up 20%. Your Citibank, which you've nailed, is up 47% of the year. Goldman's up 40%. Morgan's up 28%. And so I think that's interesting. Doug also highlights the Apollo, KKR. A lot of these stocks have turned lower, and they've really actually underperformed. So I look at this, I see the breakout guy. This goes back to the spring. I see that consolidation. Then we just had this kind of run up, right? You see that 200-day moving average all the way down there. Sooner or later it's going to be at that breakout level. You see that, fairly steep uptrend that we've had off the April lows. I mean, you tell me what these guys are going to have to put up at this valuation to keep this stock going higher.
Yeah, well, you're going to have to talk about net interest margins and the favorable yield curve, and basically loan loss provisions going down, and the health of the consumer, and all the things you hear over and over again in terms of the landscape. But your point is well taken. I mean, especially for a JP Morgan, I mean, the valuation, it's very tough, in my opinion, to justify it. Not to suggest it's not a great bank, but it's a very expensive bank on a number of different metrics, not least of which price to book or price to tangible book. So there's your trend line. You mentioned Bank of America. For some reason, I have a complete Jones. I'll use the.
You're jonesing for.
Loan.
You have a hankering to do something. Yeah.
Yes. So
he's leaving. They're creating.
Moynihan is leaving.
Yeah. Well, they're creating a secession plan.
I'm sure that the rank and file is actually probably happy about that. So that's short term. Go back all the way to 2006. So go back 20 years, and let's just see where Bank of America was and where Bank of America. Yeah. So you see, we basically got up to that prior all-time high-ish. Everything is ish in my world, right? But you see what I'm looking at here. And again, a bank that's challenged. I think a bank that's basically gotten dragged up with the rest of the banks by virtue of all the ETFs all these names find themselves in. So I will tell you, if you're looking for a counter trade, I think it comes in a number of different forms, not least of which playing BAC on the short side going into their earnings release.
Yeah. So we'll take a look at that next week into the print. And I like the way you kind of laid that out a little bit. The other thing I'll just add to on the banking side, capital markets activity, the trading. I think there was at Barclays, there was a banking industry conference maybe earlier this month, I think it was, and it seemed like, I think it was Solomon from Goldman Sachs talked about robust trading. We know that capital markets generally are opening back up. We've seen a bunch of IPOs. We're seeing private equity activity. They need advisors when you're doing a deal like a $55 billion deal for Electronic Arts that was, I think, announced yesterday or Friday afternoon. So let's just look at the XLF here for a second. And so, this is one, we talk about it all the time. Is this a well-constructed ETF? Maybe not. We know that the largest holding is 12% is Berkshire Hathaway. Berkshire's definitely been an underperformer. I think we've detailed that before. So I look at this chart, guy, and I see that gap. One of the reasons why that horizontal line is where it is, it's not arbitrary, but that was the gap going back to the spring, right? And we saw a consolidation. We saw basically a gap fill, and then we saw this move higher. But this thing has not gotten away from itself. It doesn't look nearly as steep as some of the other charts that are its components. So we have the horizontal line, which lines up with that 200-day moving average. We have that, intermediate term uptrend that it's kind of sitting on. What do you think of that range? And what would you call this chart first, I guess?
Well, I look at that, and the first thing that comes to mind, at least, in my head, is that's a hungry alligator.
Yeah.
Now, as you mentioned, I think JP Morgan and Berkshire Hathaway, I think, are basically tied for the number one holding of the XLF, both probably about 12%. I don't have it in front of me, but I'm doing it from memory. So JP Morgan is mitigated by the poor performance of Berkshire Hathaway, which is probably, to your earlier statement, one of the reasons this hasn't gotten ahead of itself. And I do think that if the world were to turn, you'd see a scenario where the whole thing flips, where Berkshire outperforms and JP Morgan underperforms. With all that said, this trend line, I think, is legit. I think that is at the 200-day moving average, if I'm not mistaken. It's seemingly flattening out, although it obviously is still trending higher. You see a break of this in a meaningful way on the back of earnings, and then you're going to start to talk about a reversion to the mean, to the 200-day, which is probably about 51-ish, if I'm not mistaken.
Yeah, and so listen, this is not a great play on the banks. Let's just be really clear, because I'm just going to go through. You're correct. 12% for Berkshire, 11 and change for JP, Visa 7.5, MasterCard 6. Then you get Bank of America at 4.5, then Wells. So this works if you are looking for a broad financial, kind of, exposure, that sort of thing, either up or down. But it's definitely underperformed, the S&P of late. And so I say to myself, okay, is this the best way to do it? You better hope for a more broad market sort of sell-off. And this is not one we're going to do. We'll look at some, like we said, we'll look at Bank of America next week prior to the print. But let's just go. Let me drive on the legend here for a second.
All right.
So if you look at the RSI on this guy, it's kind of in the middle of the range. It's kind of just meandered a little bit. Let's go to the options chain. Let's just say you were looking to kind of isolate. All those earnings. So let's go to October 17th, right? And so you see this, the ETF is trading 53.5. If I look at this at the money put in October 17th expiration, you see that would cost about 70 cents or 75 cents, excuse me. So let's look down, down to that 51 strike. That's where the 200-day moving average is going to be. So if you look at that, you're basically paying about 55 cents or something. So your break even would be down there at 52.95, and between 52.95 and 51, you can make $1.95. So risking 55 to make $1.95 if you have a move down to 51. The likelihood of the move down to 51, I just want to show you this. Let's go to the delta here on this. So if I'm looking at that 51 strike put, I see it's about a 14 delta. The options market is basically saying there's about a 14% probability that's in the money. So that's not a high probability, obviously. And so the idea of selling that put at 17 cents, it might not be doing a whole heck of a lot for you, but this is not the trade we're going to do to isolate bank earnings.
I agree with that, because I think, to our earlier point, it's not a well-constructed ETF in order to do that. I think if you really want to, and again, this is just me, if you really want to isolate bank earnings, I think you start to isolate banks specifically and start to sort of cherry pick a little bit. For example, you mentioned Citi, which I think we've done a really good job on. We thought Citi could get somewhere between 102 and 105, which was right around book value, and that's pretty much exactly what happened. And then today you're seeing all the banks sell off. Now, the bank sell off today might just be a rotation thing, because as we're sitting here, NVIDIA is making an all-time high and tech is having one of its typical days. But with that said, it doesn't mean the banks are not going to be challenged going forward, especially into earnings, for all the reasons we illustrated earlier.
Yeah. It is fascinating to see a stock like Citigroup trade down 3.5% on a day like today, right? When there's seemingly no news and the like. It just shows you that outperformance, to me, is obviously something that people want to take a shot on if they're looking to either, make express a bearish view in a bank, or looking to take profits on a move like this. So again, pretty interesting. Let's go to the Russell 2000 really quickly here, because this is one we looked at last week. We looked at it through the lens of the IWN, the ETF that tracks it. Let's just go to the chart for a second here. This is one that you and I, we just thought the idea, look at that. We still have that from last week. The idea of, look at that's kind of like this perfectly, formed V, right? And so let's just look at it on a year-to-date basis. You see what's going on there. We could draw a trend line. Let me draw this trend line. Do you mind? Bear with me, guy.
No, I'm sitting right here, baby. I see the exact trend line from the April low, then you connect the August low, and then bango, you're looking at a...
Correct. Bango is Bango a thing? I don't know. So you see that.
But my
Okay.
eyes see what your
All right,
eyes
see
see.
how flat that 200-day moving average is. I want to show you the trade that we put on last week. So let's go to the options trade. Let's go as November expiration. Let's just tap this right here, and then we looked at the ETF was trading about 245. Right now it's about 240, right? So if you looked at the 245, 225 put spread, so it's buying one of the 245s and selling one of the 225s, that cost you about $7. We paid about $5 for it at the time, so that's going in our direction. We like that. Do we sit with this thing, Guy? Because I think we play for this move back towards 230, 225 or something
Yeah.
like that.
We'll draw the trend line because now I'm curious from that April low, then the August low, and the third point is going to
Look at
be,
that.
yeah.
Look at that.
So there's your third point. So obviously with each passing day, that third point goes up a little bit, but it's probably, if I had to do it, about 234 and a half ish.
Yeah,
So
exactly.
that's
Look,
right. So that's your first level. And then obviously you break that trend line. And I think the 200-day moving average is into play. And that, as you just said, is flatlining, probably right around 220 or so. So I don't think that's out of the realm of possibility, especially now. We started the show with the government shutdown and said you don't trade on the back of it. But, if it were to happen and if it were to be the prolonged type of thing, the first thing they're going to come for, in my opinion, are the small caps in terms of the downside. So that is also a potential catalyst.
Yeah. I want to talk about what's going on in the market today outside of banks, because I think it's really interesting. You just mentioned Nvidia making a new all-time high.
Partying.
It's up to an we said that yesterday. It looks like it
Yeah,
wants to party.
I'm
Party.
not a,
It's not your jam. There's something interesting though going on. Let's just pull up, Amanda, pull up HubSpot, HUBS. Okay. So this is a SaaS company. It is down 9% right now. Like, look at that. And this is a stock. We've talked about a lot of these SaaS names that can't get out of their own way. Salesforce is down nearly 3%. Let's just work through these here a little bit. Okay. ServiceNow.
Salesforce is disappointing.
Yeah. Down 2.25%. There's just a lot of really bad action.
Yeah.
I'm looking at DocuSign down 8%, Roblox, which has been a big winner, down 3.5%, Klaviyo down 8.5%. I mean, so there's a lot of devastation. And then I want to look at some of these internet names. Netflix is down 1.5%. Pinterest is down 3.25%. Spotify is down 5%. Instacart is down 6.5%. Let me keep going here. Etsy is down 10%.
So
Reddit,
that's interesting. So let's stop on Etsy for a second, because we actually talked about Etsy on the show last night, and it came in the fact that AI is going to support Etsy and is going to be more focused in terms of buying preferences and stuff. And you obviously had a huge spike in Etsy yesterday, and to a person last night on the show, Karen said that she was long the stock and took money off the table. We all said that was a gift, and that if you have to move your feet. And look at it today; it gave yesterday's entire move back. But to your point, I mean, this is across a swath of names, which you can say these are junky companies, whatever. But there's clearly something going on today in terms of a rotation.
All right. So speaking about junky companies, let's go back to Instacart, which has got some. Why is this thing called Maple Bear? The name of this company is Maple Bear. Do you have any idea why?
Melissa loves that. I have no idea.
Know this Maple Bear. I don't know what he does.
I don't like maple syrup. I don't like anything
Really?
maple. Yeah, a maple
Wait,
leaf.
if you are served a stack of pancakes. Okay,
Yeah.
you're at a Waffle House. You had a little friend who used to love Waffle House. Do you remember that? Yeah. All right.
I do. Yeah, sure.
The big stack of pancakes, right?
Yeah.
Flapjacks. If they offer you a thing of real maple syrup or Aunt Jemima,
Aunt Jemima's every day.
Really?
100%. Because it just tastes better. The real maple syrup is like the viscosity of the real stuff. It's like engine oil. No, thank you. By the way, we haven't used viscosity on this show, I think.
By the way, I think Aunt Jemima is probably closer to motor oil. I just changed my oil a couple weeks ago.
You did it yourself?
Yeah, of course I did. Look at me.
No, you did not.
You want to hear a crazy story?
You definitely didn't change
So
the oil.
Sarah took our car in for regularly scheduled maintenance. Okay,
Mhm.
this is an SUV, and in New York City. And we got, I didn't even know these things exist, bushings. You know what bushings are?
Yeah,
that
sure,
are in the car?
bushings. Yeah.
I've never heard that word. I've never heard that word. It just, maybe I'm just not that handy. I don't know cars. So they gave us a quote to change the bushings because the front left one is leaking fluid. I would have no idea whether that's happening or not. I trust these people. I'd like to trust these people. They gave us a quote for $2,500.
Jeez.
So I call up to, my parents live in Syracuse. I think a lot of you guys know that. It's about 4 hours north, about 210 miles or something like that. And I call the local dealership of our car. I asked for a quote, $800 in labor and $340 for the parts.
Sounds like a half.
A little less than half.
Well, less than half.
I booked the appointment. They're going to do it in the day that I'm up there. I'm going to go see my parents. You know, they're 83 years old.
So
They
you're
like
killing two birds with one stone, or with one bush.
half
Ha
the price.
Yeah.
Like, that's insane.
Well, it costs. Yes, it's insane.
Yeah.
There's costs associated with doing things in the Isle of Manhattan, not least of which labor costs, right? I mean, I'm not making excuses.
Well, I want to see the breakdown. I want to see what they're going to charge me for the parts. The other thing that we did this year, and maybe you guys are going to say I'm cheap, but you know what? Our dog, Dodger, many of you guys have probably heard his name before. He had to have teeth out. You know, he's old. He's 13 years old. These dogs, their teeth start to rot.
Extractions.
Less than half the price up in Syracuse.
Yeah.
So we had it done up in Syracuse.
Let the dog suffer on the entire car ride up there. Dog's crying, but yeah, you go up to Syracuse.
All right, so back to Maple Bear.
Bill,
What
does Bill hear that?
Dude, Scott,
Bill.
He heard. He's not that impressed. How do you go from 52-week highs? Look at this range to 52-week lows. It's absolutely amazing. Now, why is the stock down? Amazon's pushing further and further into daily delivery of groceries. Now let's kind of back this thing out a little bit. It's pretty fascinating. You know, I mean, is what it is. Maybe it's nearing a point, just like it neared that double top there. I got no view on this thing. $9.5 billion market cap company. Let's just say, do they make a little money here? Maybe they do. Maybe they don't. I don't know this earnings.
So,
yeah, they do.
Let me just say this
about
the Instacart thing. I mean, first of all, we're approaching levels. I think we saw this is right around the April low, if I'm not mistaken. I think the April low is about $35. So pretty big level here. You also have previous sort of double top from February around, I don't know, 53, and this recent move up in August up to 53. So pretty key levels without a question. You've broken an uptrend line that's been in place for a while. With all that said, how lazy of a society are we? I mean, Instacart means you basically go on your device and order food.
Can I just
show up at your doorstep?
Let me just make a couple points.
I don't know. I mean,
can I make a point?
Yeah, okay. Yes, so, of course.
Are we lazy or are we being productive? Because what we're doing here is we're putting other people to work, right? And we're able to. I'm just thinking about that.
That's fair.
So there's a lot of ways to kind of think about this, right?
Get a cat.
But this is business formation. So I want to say one thing about this company. Let's assume that Amazon is not going to just destroy their business. Let's assume that there's some other partner out there for them. You know what I mean? Like maybe Instacart. You know, there's a lot of folks, Walmart in particular. Maybe it's Target, which is doing so poorly. There's some other retailers that might like to have a very close partnership with Instacart to better compete with the threat of Amazon. Okay, let's just put it that way. So this is a company that is expected to have this year $3.7 billion in revenue. Next year, nearly 4.1. So they're growing sales expectations for 10% a year for the next few years. All right, now let's just look at their GAAP earnings. Okay, this is a company that earns $1.86 a year, expected to be $2.30 next year, $2.66 the next. 17% growth this year, 24% next year. Trades at about 18 times this year, 14 times next.
Reasonable.
Yeah. All right, now I'm going to go look. This is a company, like I just said, has a $9.3 billion market cap. It's got $1.6 billion in cash. It has no debt. So it's an $8 billion enterprise value. And if you just look at all of those metrics, okay, EV to EBITDA, let's look at this thing right here, trades at about 7.5 times this year, 6.5 times next. This is a cheap stock. Like, this is a cheap stock. You have to make the assumption that
the April low. You want to trade this thing, especially
with Amazon. If expectation, and I wonder, I got to do a little more work on this. Are analysts starting to take down numbers, right, because of the competitive threat of Amazon? But just when this starts to happen, you have to start saying, what are some of those other strategic sort of partnerships they could have? Analysts on the street, 17 buy ratings, 16 holds, and 1 sell. So let's just say we're even up right here. So this is what I would say. This is a stock that is a battleground stock among consensus, or among, analysts out there on the sell side. Does it mean anything to us? Not really. But this is a stock you and I are going to take a closer look, guy, at the Maple Bear.
Deep dive. Here's one for you. This is from Clubber Lang, and I actually just looked at
Clubber.
This. Yeah. He's asking about PayPal. Now, we've talked about this a bunch of different times. PayPal is basically going nowhere now. I mean, you talk about a flatline stock. Pull up the chart and you can see what I'm talking about. Since, I don't know, 2022,
right?
It's basically been sideways. Now, it's obviously had a decent range along that period of time, but I mean, look at the sideways action. I think what you're hoping for here is the potential for, and you've brought this up, a bearish to bullish reversal. However, in order for that to happen, it probably has to get itself through like $75-ish at the minimum. So I think if you want to play it somewhat counterintuitively, I think you got to wait for a break above 75. And then I think you're going to catch this move in the gap fill back from early 2022. And then you can say, well, why wait for 75? Why not just do it now? Because, this stock has basically been sideways the entire time. So, and this is just me. I'd rather buy the breakout than try to buy it here.
Yeah, I want to give me like 2 more years on this chart for a second, okay? And so many folks are trying to figure out whether 2025, okay, or 2024 and 2025 are 1998, 99, 1999 Q1 of 2000. I don't think that is, like, from a price action standpoint, guy, I don't think that's the right comparison. To me, the right comparison is 2020 and 2021. We had very easy, financial conditions. Now, you could say that's different right now. You know what I mean? Because we have Fed funds at 4.25%, that sort of thing. But when you look at some of the activity that's going on in meme stocks, in crypto, in treasury, these treasury things, I just think are going to be an absolute disaster. Okay, if you think about, SPACs are coming back. Chamath, the SPAC king, just launched a new one. Let's just say, he did 8 SPACs. 4 he actually bought companies. 3 of them were literally zeros. SoFi ended up working out. Open Door became a meme stock recently. That stock was trading at 50 cents 3 months ago. Now it's maybe 8 or 9. I don't know what the hell it is. But as an operating business, it's a piece of shit. Virgin Galactic was another one. Went to zero. Okay, that was supposed to take people to outer space. And there was one other piece of crap. So now this guy's back. And then he had 4 others, I think, that didn't find acquisitions, and they just rolled them up and they basically liquidate them, and then the sponsors take a loss and this, that, whatever. I did some math. Can I run through this for you for a second? Do we have the time, or do you want to do this later?
No.
So I went to the Chat GPT. I use the Chat GPT. I love it. Okay. So you ready for this? Over the past 25 years, special purpose acquisition companies, those are SPACs, market in the United States has experienced dramatic cycles of growth and decline. More than 1,500 SPACs have gone public since 2000, with the vast majority of activity occurring 2020 and 2021, when over 850 deals were completed. However, subsequent years were characterized by a severe run. All right. SPAC success. This was roughly 510 SPACs have liquidated and returned capital to shareholders after failing to find suitable merger targets, an outcome representing over a third of SPACs and a number that surged in 2022 and 2024. So that's 510, okay, out of the 1,500 since 2025. Of those did complete mergers, they call it de-SPACing, disappointment in the norm. Over 85% now trade below their initial $10 offering, with an average share price of $4.13 in 2025. Market cap statistics reinforce this. Ready? Fewer than 150 of the nearly 800 surviving de-SPACs remain above $100 million market cap. This product is an absolute piece of shit. And if you're buying a blank check company because you love the All In podcast and you love Chamath, or you love something else like this, you're kind of doing it wrong. I'm just telling you. I mean, seriously, this is a piece of shit way to bring a company public. And if you just do the math on these sorts of things, over the last 25 years, the bankers make a lot of money doing this. The sponsors who get the opportunity to get all these warrants and all this other stuff, which are massively diluted to the shareholders who come in and buy it after the fact. I mean, this is a shell game. I just wanted to say that. That was
good. That was a nice. That was like remember Danny used to do a rot. By the way, this is from CC.
Off the tape, rip off the tape.
CC Lagater.
What's CC saying? That's our main man.
Well, he might not be after you read if you hear this. The downside of getting your car and dog fixed in Syracuse by the same guy, which is pretty funny, actually. That might be true. That's a good line by CC.
Like the bushings and if you told me
bushings are the things, so when your car, like they're on the brakes, so you don't have the vibrations. They mitigate vibrations in the chassis.
Okay, that's exactly what it does, because I learned that. I had to go to the chat.
You didn't believe me?
If that quote, came from the vet and said you need to have Dodgers, like your Dodge, like I don't have a Dodge, but your Dodge's bushings fixed.
Right.
I would have believed that was something that you could do to a dog. I just like, you know what I mean?
No,
like,
listen, it's bushings is a, you got to be careful.
It's an odd.
I know these bushings. Real quick.
Yeah.
Michael Cole, who's here every day, private equity stocks getting spanked. Michael sent me an interesting couple emails talking about private equity, and Gary Webb's talking about the recent weakness in some of these credit names, the firms, the upstarts. Capital One. And listen, Danny used to talk about a firm. This is a tough one for me because it had a ridiculous move to the ups. And when I say ridiculous move, I mean this stock, think about where it was. I want to say it was a $35 stock in April. It proceeded to trade $100, I think, recently. Now it's pulling back. So, I mean, I'm not going to start trying to play a little stock market here with the firm, but a lot of people think the business model, use the term sort of fugazi. Well, they believe that in a name like a firm.
Yeah. Well, I think I read somebody,
Max Lipkin,
I think it was Doug Cass, because Doug was talking about some of these private equity names. You can just call them investment management names. They do private credit. They do private equity. I don't think that's a probably adequate sort of, but pull up maybe APO. Let's pull up BX, Blackstone. These stocks are all having a tough week or so. And you'd think on the eve of this big electronics art deal that these stocks might be seeing a little bit more enthusiasm. I find that interesting. I don't know if you saw this too. This is kind of sad. Well, it's very sad. Our friend Drew McKnight, who's the co-CEO of Fortress, which you throw in this, I guess his co-CEO died at 51. I saw that. Yeah, I saw that headline this morning. It's very sad.
That is sad.
Yeah, we'll have to give Drew a couple days. We'll send him a note. That's really sad. So
that is sad.
All right. What else? Is there one other thing? Let's do one other thing in the market. One other thing, and then let's get out of here.
Okay, let's do the one other thing in the market. We had who's it on? Stu Kaiser was on the show last night, and we were talking about this government.
Citibank. He runs what?
Yeah. No, Stu's a good man.
He's a good man. I like Citi.
Pull up a day chart of the TLT. So for whatever reason, this 90 level's been problematic, and we traded higher initially. Mean yields were going lower initially. Now TLT is selling off. Yields are going back up. So this is something, to me, I think you got to continue to watch. I think what not enough people are talking about are the potential bond market ramifications if there were to be a prolonged government shutdown on top of all the other stuff that's going on. Again, the bond market is a confidence game. And obviously, to a certain extent, that confidence is being tested over the last few months for a myriad of different reasons. This would add to those reasons. And I think a shutdown for an extended length of time is very bond negative, meaning I think yields go higher. So watch this TLT today. That actually might be telling a story as to what's going to happen later on this evening.
All right, here's my one last thing. CoreWeave today, the stock is raging.
We didn't rehearse this, by the way.
No, got this contract from Meta, a $14 billion contract. Let's just kind of look at this. This is a $70-some billion market cap company, $67 billion. So, today this is all right. It's gaining in market cap half of the size of the contract. Amanda, can you just try to figure out really quickly what, like how long this contract is? So CoreWeave has had to raise a shit ton of debt to build out this infrastructure in their data centers. And it's not just the infrastructure, it's buying the GPUs, all that sort of stuff. So they have $14.5 billion of debt. Guaranteed they're going to have to go raise more. Why? Because to fulfill this $14 billion contract by Meta, they have to build out the infrastructure. And so how do you build out infrastructure? Well, you can't do it before you recognize the revenue. It's not like Meta says, hey, here's $14 billion, right? Like, build this infrastructure, or, it's one thing if they have it and they can kind of rent the computer or whatever. So this is just some goofy stuff. So now let's go to Oracle really quickly. Okay. So we talked about Oracle last week, guy. We put on a put butterfly in November. What is that? That was buying one of the 300s, selling two of the 250s, and buying one of the way downside 200s. Our view, and I think the stock was at like $312. Here it is right now. What is this at 280? And our view is going to fill in the gap because this company is going to have to raise more debt. This company is not going to be able to realize all of that, revenue that they guided to, that gave it that 30% rally or something like that. And at the end of the day, I just feel like of all the companies, this one, given all these contracts, OpenAI, and I think there was Meta and this or whatever, like what is the likelihood they're going to able to execute at the way like an Amazon or a Google Cloud or a Microsoft Azure? It's just,
it's not going to happen. And execute that will justify at its zenith a couple of weeks ago a 40 times next year's earnings multiple, which again didn't make a whole hell of a lot of sense. That's Oracle, by the way.
Yeah. Well, I just want to highlight that because we're still playing for a gap fill back towards maybe a breakout, not a full gap fill, guy. Maybe we get 260 or something like that. But with the structure, with this butterfly, we can kind of just sit and wait, because the whole idea is you get towards that. They call it the guts of the butterfly, the area that you sold two of. So that's our target there, guy. All right. Did we cover a lot of ground here?
Yeah. Can I say one thing?
Of course. It's your show.
It's our show. It's all of our shows.
Yeah, it's your show and it's my show.
So this
it's our show.
Right. So what year? This is 2025, right?
Yeah, still.
Yeah. The New York Jets, who used to play at Shea Stadium, now play at the Meadowlands, whatever the F they call that place, right? They won the Super Bowl in 1969. So the math suggests it's about 46 or so years ago.
Who won the World Series that year?
Mets. Knicks won as well, by the way. Big year in 69 for New York sports. The Mets beat, I believe, the Baltimore Orioles, the Jim Palmer-led Baltimore Orioles. The Jets beat the Baltimore Colts. And the Knicks, on their way to a championship, beat the Baltimore...
Why did you say the Johnny Unitas Baltimore Colts?
I could have said that, except that Johnny Unitas didn't start that Super Bowl game. You
really?
didn't know that, did you? Yeah.
No. Huh.
Go look it up. We didn't. Little
you were
known
there.
fact.
You remember? You were there.
I was there. It was down in Florida. No, Johnny Unitas came off the bench late.
Oh, really? You were 6 years old. Did he have like a winning touchdown or something?
No, they lost the game. The Jets beat them, so it'd be hard for him to have a winning touchdown. The Jets. My point is this: since that time, being a Jet fan, which I am not, has been an unmitigated disaster. They've had more head coaches than I have had pairs of socks over that period of time. But last night, Aaron Glenn, their most recent head coach, at halftime talked about, we just have to play Jet football. What the fuck is Jet football? What is fucking Jet football? Explain that to me, you asshole. Jet football, it means we suck for the last 50 fucking years. And you're going on national television and saying, we just got to play Jet football. That's the dumbest thing I've ever fucking heard. You should do anything but play Jet football. Here's something new and different. We're going to play New England Patriots football the last 20 years, or Kansas City Chief football, or Baltimore Raven fucking football. The last thing you want to do is play Jet football. Asshole.
Well, you don't want to play Raven football. Did you see him the other night?
Yeah, no, I understand.
They were a disaster.
Anyway, that's it. I'm sure I
was 69 like the only time they the Jets
went to the Super Bowl. Jets have not been to the Super Bowl
They've
since.
lost a couple AFC didn't they?
They've lost back-to-back AFC championship games. That fat shit Rex Ryan was the coach. They went, I think they lost to Denver, I believe, with Bill Parcells, a team that Parcells thought should have won the Super Bowl. That didn't happen. Other than that, I don't think they've maybe one more AFC championship game. They suck. Who's this? Is this Jacob doing this? This is fantastic.
Yeah.
Great.
Rex Ryan might possibly be the worst and so
Human being.
contrived. No. When you see him, he's on NFL Network, which
Yeah,
I think he's.
awful.
I was watching what's on. Yes, but he was so bad. I just there's nothing about him.
No, he's he's unlikable. His father was unlikable. He's unlikable. His brother's unlikable. I'm sure if he has kids, they're unlikable. His dog's probably unlikable. He probably takes his car to Syracuse to get the bushings fixed. Cracking myself up. My wife is yelling. What? No, Linda's yelling at me.
All right, we should get out of here.
Well, I'm sorry, Amanda. By the way, happy birthday, Amanda. Happy birthday, Ellie Nathan.
All right,
and your niece.
Oh yeah, my niece.
Gotta think of it.
Birthday too, Abby. I have a lot. I have a handful of nieces and nephews, and there's Avery and Abby.
Okay.
All right, they won't be watching this either.
No.
Thanks so much, everybody. Happy birthday to everyone. Bye.